Most platforms building embedded finance start with payments. Lending often comes next. But what happens when invoices don't get paid is often the last thing on the roadmap. However, for many SMEs, it's one of the most painful experiences. In this episode, I'm speaking with Matteo Benedetti, co-founder and CEO of Debtist, a digital debt collection provider based in Berlin. Debtist embeds collection directly into vertical software platforms and marketplaces so that SMEs can recover unpaid invoices without ever leaving the tool they're already using. In just over 2 years, Debtist has built close to a dozen embedded partnerships, reached 12 million euros ARR, and, unusually for an early-stage fintech, is already profitable. We talk about how embedded collection actually works, why platforms are starting to come to them instead of the other way around, and what it takes to build a profitable fintech from the beginning. I'm Lars Markel, and you're listening to the Embedded Finance Review podcast. Embedded Finance Review is a newsletter, podcast, and event series covering the European embedded finance ecosystem. And we have some exciting news. Our next in-person event is on April 15th in Berlin. It's an official side event of FIBE, Fintech Berlin Conference. If you want to meet the people building and enabling embedded finance in Europe, you will find the link in the show notes. And if you are a non-financial brand or infrastructure provider exploring embedded finance and want a free intro call to get feedback on your approach and introductions to potential providers or customers, reach out to me via embeddedfinancereview.com. And now, let's dive in. Hi, Matteo. Welcome to the podcast. How are you doing today, and in what part of the world are you actually located right now?
Amazing. I couldn't be doing better. Thanks for having me, Lars. Actually, I'm currently in Bangkok. Normally in winter time, I try to escape Europe. So it's warmer, but also a bit later.
Great. We just spoke about that, escaping the weather here in Germany, especially this year, with the harsh temperature, was definitely a good call. Matteo, it's great to chat about Debtist and obviously the whole business, the industry in digital debt collection. This is here, of course, also an embedded finance podcast. And typically we split embedded finance into payment, banking, lending, insurance, and investment. And I'm quite keen with debt collection as obviously, let's say, not an own part of its own. Where would you see the position of debt collection, digital debt collection in the embedded finance ecosystem?
Interesting question. If you listen to the finfluencers, they normally put us under banking. So if you see the logo split into different categories, we are under banking. I would agree with them. It makes a lot of sense given we're just a prolonged arm. So if payment is delinquent, we come in. So I would put us under banking. I'll bet some could also argue it's banking. So payment first, banking second, depending on the portfolio, I guess. But payment also sounds a bit nicer.
Yeah. Obviously, we'll talk and we'll dive into the details, and maybe the listeners can also make up their own choice where they would put you. At the end of it, it probably doesn't really matter anyway, as long as you're creating value for your customers. But of course, the Embedded Finance podcast, so our focus, we have quite a few listeners in the, let's say, platform and marketplaces space. And you mentioned already you're offering digital debt collection. I'm quite keen if you can kind of walk us a little bit through how debt collection for these companies has historically worked, what the issues were, and how you are addressing that with Debtist.
Amazing. Happy to do that. So we have a direct arm and an embedded arm. So we do both. I will focus, of course, today only on the embedded side of things. Before, the short answer would be they didn't do it. So normally what you have is in software platforms, we like to call them aggregators. They have invoicing as the core part of the value chain. Then they have some sort of very simplistic white label payment reminder. But after the white label payment reminder, so you ask your clients to pay in your name, the entire Dunning streak stops. So what we do is basically extending this just with an opt-in or an opt-out, where the clients basically of the software platform can use our service without leaving the aggregator. The benefits, of course, being super clear, the integration costs are basically nil and the acquisition costs are also nil. So even very, very small clients can now get the best of class of collection services that was usually only for the very, very big corporations. You would assume that there are a lot of open doors. It's of course still a very hard sell to get into the core value chain of these platforms, but we've been quite successful. Now we have close to a dozen embeddings, and there are very, very exciting ones coming up. But before us, there was not really a solution.
Interesting. So the example you gave is, maybe to put some more details towards it, is like let's take like a vertical software as a service provider focusing maybe on healthcare professionals, on doctors, practitioners. They're using this vertical software, obviously, by definition, for quite a broad things of activities. Very often, very common, of course, financial features, or starting with maybe features like invoicing, where the doctor or the healthcare professional can create an invoice and send it to their own patient, who then, of course, hopefully pays one way or another. And that's typically where you're saying, like, historically, these providers would have stopped there and kind of left it then to the doctor, to the healthcare professional. If the customer doesn't pay, you go and figure it yourself. And now with the Debtist solution, this can be embedded into the vertical SaaS. Can you maybe describe from, in that case, a doctor professional perspective, like how would it look like? There's an additional click or feature on the platform where they can start this process, or how would it work?
Yeah, happy to. It's quite complex and diverse how our partners solve this from a design perspective. Normally, it's somewhat of like a separate section within the invoicing part, and it's very similar to the payment reminder part. The difference, of course, is it's much more complex. So you have to exchange much more information about the time and also the information. However, before us, the health practitioner would have to go to an external solution. And normally, the smaller the collection players are, the trickier and the more expensive it gets. Right now, it's completely seamless. So you have an opt-in or an opt-out. So normally you have a toggle where you can either say, I want to individually select the ones that go there, or I want to automatically send them after certain days past due to Debtist, and I basically opt out with individual invoices. The beauty is the information that we need is all within these platforms. So be it the health practitioner platform, be it a software that car dealers use. So any software that has the invoicing part has all the information that we use. So you don't have to input any additional information. It just seamlessly goes. And we in the back basically do all the work. And we, of course, escalate this case to you, to the health practitioner in this case, if we need something. But in most cases, actually, the basic information is sufficient, which is the main beauty of it.
Understood. And then, staying the example, I think I picked also the healthcare professional. I'm going to a dentist later. I think maybe a good example would be here, like the teeth cleaning. I get the invoice, maybe don't pay it right at the spot. Maybe my dentist gives me 14 days to pay this. After 14 days, I've not paid this. So this would then be the point where this dentist could say, okay, now I want to start with Debtist. And how would the journey then look with you? Obviously, there might be some modifications as well, depending on platform preference here and there. But maybe let's focus on, let's say, a standard journey after that.
Amazing. Just looking at the standard journey, you have input at what day do you want to normally hand over. The handover is also the first step. So you have to have the information. This is already given. The handover is normally an integration. That is also given because we integrate ourselves in these aggregators. And thus it's the click of a button, or even if you have an opt-out, it's seamless. So the handover would be the first step, which you in best case don't even touch. It starts with us now with a 10-step process. We do everything in industries, so we're completely agnostic from construction to etc. So we do every industry and also every end consumer / debtor. So it could be B2B, B2C, it could be a merchant, so also like a semi B2B structure. And also with the ambition, of course, to do all of Europe and also foreign markets out of the union. The first step is the research though. So we have the case, no matter what case it is, and we have a 10-step process, which is optimized for each industry and each of end debtor, which adds additional information. So we have our own databases, our own team that does that, and they basically go through these 10 steps and add additional contact information so we can escalate this case. Once this is done, and this happens for every case, partially automatic, partially manual, it goes into the Dunning streak. There we have, which is quite standard by now in the industry, an omni-channel approach. So we send normally 4 to 5 letters, 4 to 5 emails, WhatsApp, SMS. We call at least 4 to 5 times. Of course, it's very individualistic with us. We have an artificial intelligence as a decision metric behind. So there is not a standard flow, but the AI decides actually what happens next based on pure basic math. However, we don't minimize cost. So we always have, and that's very important for the embedded, we always have the approach hypercare for the smallest butcher next door that has 2 cases a year, and also the biggest e-commerce or mobility players in Europe. They get basically the same quality service, which wasn't attainable earlier. So either way, you have a minimum service level agreement through the aggregator, with minimum touch point, minimum research, and a very straightforward pricing that you wouldn't be able to attain anywhere else.
Okay. And from this, I mean, I've understood that like after, let's say, in this example, I've not paid for my teeth cleaning. Of course I will, but let's say I have not, you will then contact me through various different channels, of course, depending on what content information the debtors have from me, provide them or share them with you. You reach out to me. How long is this kind of like, I mean, obviously once I pay, the case is closed, but how long would this go on for, and how much of this journey would you be involved in?
The usual journey goes, I would say, 15 to 90 days. That's the pre-court part. So that's the very cost-efficient, out-of-court solution finding. That's where you try to that's where you solve most of the cases. In some industries, up to 95% of cases.
Continuous reminders, the nudges, trying different times, different days, different ways to kind of stay on top of the person. Okay.
That is part of the job. We always answer also same day. So that's also a differentiator because we just are very tech savvy. However, we have for some embedded solutions even the next step already. Not everyone is keen to integrate that, but some do, which would be the court part. So we have court legal partners in every country. And we do basically the entire communication with the legal partners. We have preset prices, negotiate with them, which are also like, of course, negotiated on a huge volume. So it's also like a very, very fair pricing. And the court part as well, we can do as an embedded solution. So it doesn't stop with the 15 to 90 days. We can also go further. However, the court process inherently is much, much longer, much more complex and much more expensive. So at that point, we're talking about like the last few percentage points of cases. So that, of course, you can scale it not as well as the pre-court because only few customers will experience it. And then they have to learn the entire process from the start and you have to educate them about it. So this is a step that we offer. However, the adoption is not nearly anywhere as pre-court. So the standard flow remains 15 to 90 days, and you normally realize most of the claims within that.
And I guess, again, depends a lot on the industry and the invoice volume and the invoice average transaction or the average size of the invoice, what makes sense and what to focus on. Matteo, you mentioned at the beginning that obviously you as a business, you focus on SMEs directly and also have the embedded approach. And of course, as we said, like a focus here mostly on the embedded approach. Nevertheless, quite keen to understand how did you end up going the embedded route, right? From what I understood is that coming back to the vertical SaaS example of the dentist, this dentist in the old world, before using maybe even a vertical SaaS and having debt collection as part of this offering, he or she would have gone out to a debt collection agency, him or herself, and then would have basically maybe worked with a company like yours or somebody else to do that. And now it's like integrated. And from what I understood is also you started with a direct SME approach before kind of venturing also into the embedded way. What was the thinking? What made you do this move? And how did these two parts grow since you offer both of them?
Yeah, a simplistic answer would be luck. We started actually at the very beginning when
an honest answer as well.
Yeah, I have to be honest in this forum. But like when we fundraised, we actually sold the idea of a embedded collection. That was of course also driven by it sounds better than just collections. So embedded was very, very strong back when we fundraised in 2023 still, which it still is, of course. So it made fundraising much, much easier. But there was a real business case. So the direct business has, of course, much shorter acquisition times and is much, much more straightforward in scaling. Because, like, of course, with embedded inherently, getting into the software as somebody requires this form of trust that you wouldn't have in a direct kind of business. So the lead times are much, much longer. We got very lucky with one player who had a very, very early, very, very bad embedded solution. It didn't work at all. And we had our system completely built in-house. So we had like an open API. We had the workflow for embedded already built in. So it was luck and at the same time also perhaps destiny that we started with this partner. It worked very, very well.
When was that?
That was early 2024, actually. So like 6-7 months after fundraising finish. And it really took off very, very quickly. And showed us that embedded is not only like a catchphrase, it really, really worked. And we scaled, like it became one of our biggest clients very, very quickly. And then we continued. We have like our own sales department for embedded where we find partners and basically have like, of course, a much, much more hands-on experience in the engineering, given that we are like so much involved in the native environment of the partners. And now I think we have like roughly a dozen of embedded partners and like there are lots of news coming the next months, like very, very cool partners that we're very excited about. But yeah, like the first use case was the use case that paved the way for us.
I think you said like you launched for the first one like early 2024, so now it's like first quarter 2026, so it's a bit over 2 years. Do you really like a view like hasn't changed the last 2 years already? Obviously, you've not made a full reach out in early 2024 to a lot of companies, but like, do you see a change in mindset of these providers? And obviously, we spoke a lot about vertical SaaS, but of course there might also be marketplaces and maybe other SaaS companies who are not in the vertical category. You've seen like a shift. Is this something also what, from my understanding, is obviously, and this might be now stronger in the vertical SaaS space again, is that there's typically a journey of what features and tools you're building, right? You kind of start first, there's the assumption this is an industry which kind of deserves its own vertical solution. Then you figure out what's a good starting point. And then at one point you have to hit invoices. And when this is big and growing and relevant, only then probably debt collection makes sense, right? So I guess you as a company, especially in the vertical SaaS, kind of have to wait a little bit until the things are in place, but quite keen from your point of view, the last 2 years, how has this customer segment changed for you? And is the interest like growing for debt collection or?
Definitely. Like there's a massive shift in embedded solution for collection. We're still the only player, I think, even worldwide, that basically has like their own workflow and a complete separate unit that does that. The shift is, however, not completely finalized, I would say. We're still in it. There is now the shift that we're currently experiencing is at the beginning, we had to contact partners. Now the partners contact us. The same that rejected us in 2024 are now coming to us and say like, that makes actually a lot of sense because the monetization is also very strong. So aggregators now understand I can ask for premium memberships if I add these services. And also I can receive some sort of remuneration because the monetization with collection is much, much higher than normally a membership through a B2B SaaS. So these two, this understanding is currently happening. I think the shift is not finalized yet because the understanding will come that this is not a nice to have criteria for my clients and like a monetization. It's more a must have that I have to basically keep up with other platforms because so many, like we had like with one of those aggregators, a survey done, what kind of solution is necessary within this invoicing tool. And I think the first place was collection with more than double the votes to the second placed feature that they requested. So like there's a huge need, but the shift takes time. It's a cultural thing, of course.
It's interesting. I mean, obviously by now it's like for me it's also quite present, this need, but when you start building a solution for a vertical invoicing and stuff, debt collection is maybe not the first one you think about, but obviously this is a challenge when customers are not paying consumers or businesses, not paying to these businesses, then obviously they have to find a way to get their money, right? And obviously they either go out, and again, if you're a vertical software provider and you see all your customers go to other companies for one specific thing, sooner or later, you should probably find a way to integrating this. And Matteo, I mean, quite interesting as well, like how did you build Debtist? You mentioned already, but like quite a bit of this in-house. I think there are like different parts to it. Quite keen to understand what kind of like service providers you're relying to make this happen. Is this completely in-house? And then, let's start with that.
The philosophy that we had when we built Debtist was we want to be a tech company first and second a service provider. So with that, of course, naturally, you want to build everything from A to Z. If I would do it again, I would say now with my expertise in the industry, I would say that's a very dumb decision, but it proved to be a very good decision as well. So it was extremely complex to start. It would be impossible if we already had collection business. So it was very good that it was basically like a complete greenfield for us with no databases to migrate, nothing. So like this would have been impossible with the complexity that we have in our business. We started from nil and it was really like, what is the next thing that we need? We were kind of strategic in like the pieces that we wanted to build, but it was also more like a pull, like then we need this for that market and there's a piece missing. So we built all the core systems ourselves. I'm biased, but one of the best engineering teams, I think, in Berlin. We have, of course, where like a lot of manual labor is involved, partners. These are not core solutions, but for example, printing out letters and sending them to even Singapore, that does a service partner for us, of course, as well as also receiving letters. So we are by now a sizable team, but if I had to open all the letters that arrived and scan them, we would be double as many. So this is also done by a service provider who basically scans them and pipes them in our system so the artificial intelligence can read the content of the letter and understand what it is about. So we have partners, external software partners, but the core solutions are always within our hand. And this, especially for embedded, was extremely important because we saw competitors trying to move in that space and then basically had not much success just because off-the-shelf tools, it takes 10 times more time to get even the most basic features done, let alone integrations. So the engineering teams normally decide which player to pick, and they thankfully thus far always decided for us.
And maybe moving slightly more into the commercial corner, obviously understanding you're serving now SMEs directly and also embedded partners. How, without going like into too much of pricing details, but how is this like typically structured? Is this a fixed fee for each customer that you're getting? Is it variable? Does it depend on success? Yes or no? Quite keen to understand that a bit better.
So it depends on the market. So thus far, we don't rely on success fees in the embedded part, just because it's also quite complex to implement. You normally have some sort of debtor remuneration. So the debtor has to pay a fee. With our high automation, this suffices at scale to be profitable. There will be unprofitable and profitable cases. But especially for embedded solutions, the pricing structure is very similar to enterprise clients in a direct business stream that we have. Because, of course, the aggregator negotiates that with us and not like the dentist that you mentioned earlier. So it's normally a debtor-facing remuneration. There are some fees towards the creditors or the user of the software that mandates us. But that's our task. So the complexity really is different legislation in sometimes even within countries, but also across like the European landscape, and also different pricing schemes. So we had to harmonize it, and it's a debtor-facing remuneration plus sometimes a small fixed fee on the user side, creditor side. And this works quite well. There are alterations to that. So like platforms like to have a different mix so that there's not like just one answer. But commercially, again, like the technical integration is easier, the handover is easier, the acquisition is easier, but also the pricing is 3-4x better than what you were used to have. And also the transparency on information. But the pricing, of course, is a super important part. And just one point on pricing perhaps, Lars, when you look at the platforms themselves, sometimes they want a cut of it. And of course, it's super, super enticing because if you have a platform with 250,000 SMEs, you get, let's say, 2-3 euros per case that you hand over as a kickback. Of course, that scale makes a huge difference. So it's extremely interesting for the users that have to pay much less than they used to pay. But it's also extremely interesting to the platforms because it's one of the main monetization that they can do.
Interesting. So, I mean, that we've seen, of course, in the embedded finance landscape that there are some financial products which have some quite interesting financial benefits for the platforms, for the providers who offer it. And I wasn't aware. So even in the debt collection space, this is feasible. I guess it requires scale and the right numbers, but interesting that even that is possible.
Very high scale enables us, but very high scale is needed.
And Matteo, I think you also publicly talked quite a bit about the success that you had in the space. Obviously, you mentioned already a few announcements coming up, and obviously I'm looking forward to see and read them and feature them in the newsletter as well. But you did also mention you did some fundraise and then have been growing quite a bit. This is, correct me if I'm wrong, if I've read also that the company is profitable right now, which I think in this, like the early stage of a fintech company in Europe is rather uncommon. Maybe you can explain a little bit, how did you achieve that? Maybe some luck was also in there again, or was in some of the actions? But what quite keen to understand, because again, it's like quite pretty uncommon in the fintech ecosystem to achieve it that early.
Luck is always part of the equation, fortunately. So we were lucky in most things that we did at Debtist. The main reason why we're profitable are 3 things. So I normally answer with, as a founder, you have to look at 3 things. With whom do I found, what do I found, and how do I finance it? And all 3 decisions we took for profitability, because that will also get the best service to the client, because we want to like minimize cost and maximize realization for them. The first one is, of course, how do you finance it? We did a pre-seed round back then, and we barely or not even at all touched the funding. It gave us much, much more rest when we slept at night because we knew that there was a cushion. But we always knew that we won't do another financing round. With that thinking that you don't have a Series A, etc. following, that the mindset shifts completely. So you have to also think differently. So this bootstrap thinking was also the second, like with whom do you found? My 2 co-founders, we are kind of, well, penny pinchers, you could say. So we love to minimize costs. So we share still to this day hotel rooms. We never sleep alone. We always travel second class. We try to minimize costs from A to Z because we believe the cost has to be paid by someone, and it's normally our clients, and we don't want our clients to pay for the Ritz-Carlton. So that's why we don't do that. And last but not least, what do we found? That's the luck part, I guess. We found it, of course, also an industry that is not B2B SaaS, but also service. So the mixture of service, AI, and fintech, they go very well together. So you couldn't achieve a positive margin that quickly if you were in a B2B SaaS alone, because the monetization dynamics are just different. So it was a play of these three different factors. But I think the penny pincher mentality is probably the biggest one.
That was quite helpful. And you did mention that when you raised the round, you were kind of like, sure, okay, this is the only round we need, and nothing else is necessary. I mean, I've been also involved in a shoe startup. I heard that very often as well, and then the reality sometimes was completely different when reality hits you on the face. But obviously, that's something you have now experienced in the last couple of months. But how do you look at the space of, like, I mean, you mentioned already there's not really any like competitors, specifically the embedded world. Now you're talking about like how profitable you are, how well this is going. Might also result that one or two listeners are out there and thinking, maybe I should explore this possibilities as well. Isn't that something you're afraid of? Like, how do you see competition evolving in this market?
So it's hyper competitive, and I hope that listeners think this is interesting, because then out of like selection that there are no other different options out there, then they probably come to us. There are competitors that try to go into that space. However, normally they're too big and slow to add additional service lines such as embedded. On top of that, the industry, and I got one or two comments from competitors complaining about that, but the status quo is we hire, of course, also from competitors. We get, of course, also a perspective on like how things work there. So the industry is extremely off-the-shelf software driven, is, despite the marketing, of course, extremely untech savvy. We had only recently a call with like one of the biggest collection providers, and diplomatically there was some arrogance in the room because they also think like to be cutting edge. But the reality in the industry is like it's a very incumbent driven industry, and it's tech savvy to some extent, but it's not cutting edge. And that's mainly driven by, if you're a founder, especially a tech founder, you don't think of collection first. So this is a mode that we are a tech first company with everything built ourselves that is really hard to attain for like a traditional company. And also new companies, you have to get licenses in many countries, you have to build the software from scratch, you have to get clients. There was an opening window for that a few years ago. So market incumbents, we don't believe that they come. We thought it at the beginning, but now knowing the industry, we're not very afraid of that. And new market entrants are, I think, more riskier entrant for us. But still, I believe there are so many things that you have to hit that competition is not that drives us. There is competition in getting clients and partners. But if you compare in a neutral observation, we normally don't think about competition. We think just like, how can we be better? And this served us quite well. So we think about everything but competition.
You did mention right now that obviously the debt collection industry is not the first one that maybe aspiring founders would look at. Then maybe giving this question to you and to your founding team, how did you pick the debt collection services as a space to found it?
That's a long one. At McKinsey as a consultant, I had the tendency to pick the most boring projects. I just loved banking, I loved finance, and collection is somewhat boring. Most people would probably say. To me, it's extremely, extremely interesting. And I saw that there's a use case. I was at many, many engagements with clients in this industry, and I just saw there's a real use case. So it was more the idea picked me than vice versa. It could have been everything. There are so many boring ideas out there. I could have landed in any of those. I'm very lucky that collections was it, because like we had our fair share of luck and success. However, it was again luck. So I like to use luck as an answer because that is the most descriptive.
Understood. And then maybe final question going in that direction as well. Let's say there are some listeners out there who are inspired by your journey and maybe don't want to start a digital debt collection company, but maybe want to pick another boring industry and go into that. I mean, do you have any general advice, and maybe specifically focusing on, of course, it sounds super easy, like pick a boring industry and just build something successful, especially maybe where a digital solution is not really available. Then very often also when you look at some of these industries. Sometimes there's a reason a provider like this doesn't exist. So just because there's not a provider today in a specific boring industry doing something digitally, sometimes there's a good reason for that. How do you look at maybe other industries when people ask you, how should I go after this or that? How did you back in the days with Debtist validate that this one is actually worthwhile going into?
Very interesting question. I think my 2 cents would be you have to answer 3 things, like what do I found, with whom do I found, and how do I finance it? What do I found? I think mostly should look at unit economics at boring businesses, because unlike the moonshot VC cases, you normally want to break even quickly. So the unit economics tell you most about that. So go very general unit economics, don't overcomplicate it. I as an ex-McKinsey normally like to do that, but try to stay very simplistic. And with whom do you found? You need people that are very hands-on and driven, and also go the extra mile. And third, how do I finance it? Go always for the pre-seed. You will get a pre-seed funding. Even in boring businesses, you can get that. And this normally goes very, very far. I think like there's so many boring opportunities out there, especially with artificial intelligence. So just look at unit economics and how does AI influence it? There are so many, like I have just now a very good friend of mine. He does insurance invoicing with artificial intelligence, Doctario in Munich, very successful. I have another friend who does Wasserschadensanierung, like basically like your wall is wet, let's dry it. And these kind of businesses, they normally work. So the expected value is always positive. You just have to find it. And again, the 3 things, with whom, what, and how I finance, if you answer those correctly, the expected value is basically 100%.
And I guess there might be also some interdependency between these 3 things, depending how you answer certain things. What you found, how you finance is obviously very much correlated, and also with whom you potentially do that.
100%.
Thank you so much. Is there anything we left out that we should tackle, or do you think we covered all of it?
I think we covered all of it. It was extremely sympathetic, Lars, and thanks for having me. That was super nice.
Yeah, thanks again for joining, Matteo. Is there anybody out there who wants to maybe learn more about Debtist, or maybe wants to chat with you? Is there a good way to get in touch with you?
Yeah, of course. So just send to the info mail at Debtist. They all go to me. So I get a lot of email, but please do reach out. We have, of course, also a sales team. If you mention my name, they can also forward you to me. And on LinkedIn, of course, feel free to connect. Happy to continue the discussion on a bilateral level.
Thanks again, Matteo. And until next time.
Thank you.
Thank you for listening. If you like this episode, please make sure to follow the Embedded Finance Review podcast in your favorite podcasting app. And if you know somebody with an interesting embedded finance story to tell, please reach out to me. Until next time.